Tuesday, November 30th, 2016. Monaco 64, home of alternative economics and contrarian views. I want to look at the precious metals market today. I'm going to look at the mining share index, the XAU, and the HUY gold bugs index. I'll talk a little bit about gold as well, the gold futures actually on COMEX. What else? And I'm going to talk about a couple of mining stocks that I follow and give you my opinion on it technically for the gold mining stocks and the indices and what it could mean for precious metals going ahead. So, excuse me. So first of all, I want to start out with the XAU, which is the Philadelphia Gold and Silver Index. And you can see here this chart. We've had a huge move, in 2016, all the way from below 40 to presently at 80.88. As you can see, the low in the beginning, towards the beginning of June, and the low, recent low there a few weeks ago in October, kind of formed a head and shoulder, but we haven't been able to break the neckline, which is basically around 80. So the market is holding that neckline. We've got the 100-day moving average still above the 200-day moving average. So the XAU yesterday was down 1%. The 52-week low then in the XAU is 38.36. The 52-week high is 114.71. And basically the 50% retracement of the move we've had this year is 76.54. So it looks like we're holding above the 50% retracement. We haven't even been close to the 61.8%, which is 67.53. So that's the XAU. Yeah, not much direction at the moment, holding fairly well above or just around the neckline. And as you can see, we've more than doubled since the beginning of the, the low early this year, around February time. So even though we've had the correction, like over 30% correction, the market's still doing well, compared to the beginning of the year. Now I'm going to bring up the gold bugs index, or the HUY, and here's the chart of it. So yesterday it closed at 182.01, or down 1.9%, so it didn't perform as well as the XAU. You can see there was a kind of a neckline and a head and shoulder there, neckline around 200. We've broken through that level, and we've traded down to around 175 there, it looks like the low. And in terms of longer term, since early February, XAU has gone from a low of 80 let's have a look. XAU from a low of 99.19 to a high of 286. So basically from around 100 to 286, and right now we are at 182. So looking at the Fibonacci retracement, the 50% is basically 192.62. So it looks like we need to get back above that level. The 61.8 retracement would be 170.57, which we've held. We haven't gone as far down exactly as 170, but you can see there it's just above 170, the low so far in this correction. 100-day and 100-day moving average still above the 200-day moving average. So basically we need to get back above 200 in the HUY. And looking at it as well, from the beginning of February, we've gone from basically 100 and now we're 182. So it's still up like, 82%. So not, even though we've had a big correction as well, more than 50% from the high, it still looks encouraging in terms of a longer term chart. The RSI below, you can see, is quite low, around the 20 level. So that's it for the HUY. Now I'm going to talk about a couple of mining stocks I look at. Hecla Mining, and I'm going to look at Hecla Mining, which has been on the New York Stock Exchange for years, and it's used to be a purely silver mining company, but now they're diversifying, they're doing gold as well, so I think it's a good proxy for both metals. And I'm bringing up the chart here. You can see we've gone from a low in January around 146, and right now we're at 624. So despite the big correction there from the high in the beginning of August at 725, we're still doing fairly well. We corrected basically 38.2% retracement of the move from January to the beginning of August. I know we spiked higher just prior to the US election there, but I'm just looking at the move into the beginning of August, and we've broken through this falling wedge, which is bullish, and so that looks pretty good. You can see that it's kind of been testing the 6 level, but it's closed below it a couple weeks ago, and this week is back up above it. Yesterday I saw that on the open we broke through $6, went down to $5.90, not right on the open, but we were able to recover and close at around $6.25, which is a positive move for Hecla Mining and the mining shares in general. So that's looking pretty good despite the correction we've seen, from the high of 725. We're still up massively since January, Hecla Mining, so still looking pretty good. Now I'm going to look at McEwen Mining, which is another interesting mining share. Rob McEwen is a great, has a great reputation in the mining business. So you can see that we're beginning of January, we're trading just below $1, and we made a high of around $4.93 beginning of July. We've quite a sharp correction, much more than the correction in Hecla Mining. We've corrected basically 61.8%. We traded down to around 2.5. We need to get back above $3, and then try to, and then 3.5 and 4, just normal technical round numbers. So McEwen Mining, probably more relative to Hecla Mining, maybe a little more opportunity on the upside. This is just what I'm not advising people to do anything on these mining shares. I'm just telling you what I think. And yeah, I think it looks like, these corrections are kind of winding down. And there's a couple of stories I wanted to talk about as well, articles that I've seen. One is on Silver Doctors, and it's by Craig Hemke, and he says, the dollar yen and the price of gold. And I quote Craig Hemke, because he looks a lot at the futures on COMEX and open interest, and he says, well, we finally reached contract expiration as the December 2016 COMEX gold future and silver contracts go off the board and into delivery at the close of today, meaning yesterday. So with total COMEX open interest now back to the levels of last December, and he asks the question, could price finally be near a bottom? And so he's basically talking about how the fact that open interest has dropped to the lowest it was last year in December when the market bottomed. So he looks here at the open interest, November 25th, 2015, when gold was 1,072. Total open interest was 393,110. Then at the end of the year, when gold was at 1065, open interest was at 415,220. And then in July, earlier in July this year, when gold was at 1,364, very near the highs, open interest had risen to 657,776. And now on 28th of November, open interest with gold at 1191 was at 410,824. So basically that means there's less people committed to gold, less open positions, open interest. So that, could be a signal of a bottom in gold. We'll have to see. And the other article that I read here, that's on King Gold News, and he's interviewing John Embry from Sprott. And he says, by the way, the precious metal shares, which have corrected sharply in conjunction with the bullion price takedown, and that everybody wanted to own at the peak of the summer rally, now represents tremendous upside leverage at this juncture. So this is a guy who's been in the business for 50 years. I've followed John Embry and Eric Sprott. So just wanted to get that out there. Precious metals and the mining shares or mining stocks. This morning, it's 10:36 a.m. London or 5:36 Eastern Standard Time. Gold is at 1187.20, down about $1. Silver is 1666, up about 5 cents. The Dow is up 22 points at 19,142. The pound's weaker, down 0.5%. Euro unchanged. Dollar a little stronger against the yen at 113. 113.07. It's up 0.2%. Actually, the dollar fairly strong against the yen. And Bitcoin also rebounding this morning. Let's see, we're at basically around 740. So Bitcoin rebounding. 750 is still the key technical level. So if you enjoyed this video, please give me a thumbs up. Share this video far and wide. And if you haven't subscribed to my channel yet, please do. And if you'd like to donate, there's some links below in the description. We accept Bitcoin, BitGold. You can pay through PayPal or Patreon. I'll talk to you later. Take care. Bye.